Alright guys, we got a lot to learn from today. There's a lot we need to look at because I was really offside today. Like it was really bad. So I really want to understand today on a deeper level. So we're gonna jump into the charts and really get a good idea of what happened and what was going on. So with that, I'm gonna open up my files and we will be using SB Pro X to find whales and figure out how that influenced the market. So hopefully you guys enjoy. We're gonna get right into this. So I'm gonna get out the file for today. So here's the file for today. I do have some trades in here already. First things first, obviously market was bullish today, obviously, right? We ended up clearly, well, started out going higher. That not the whole day. The rest of the day I was right about bias and we went lower, but at the start of the day we went higher. And that really caught me off guard because I thought we were gonna go lower. So I guess let's just kind of go top down and figure out why did we go lower here? Or no, why did we go higher initially? So we have midnight up here, bang, and so we were below midnight. You can see that was the case, and then we have true week open over here. And we were below that. So in hindsight, I am wondering a little bit, like, okay, we were below true week open, below true day open. Why did I think to be bearish? It's a really interesting thought. I don't know. And then yeah, we were way below midnight, and you have to wonder why I didn't take that into account. 7:30 is the exact same as true week open. That's interesting. Well, almost the exact same. So there's 7:30, bang. And so honestly, we were definitely in time-based discount. I don't really know why I didn't take that into account. And then when you combine that with the fact that we were actually using a reclaimed gap, right? We had a 1 hour gap here that was being reclaimed. You can see we'd already used it once, kind of twice. So 1, 2, 3, this is the 4th time we used it, right? So like I was saying, I don't know why I was bearish. I really can't tell you. Plus we had a data high above. In hindsight, I was just really offside here. I think I saw FA say that he was bearish, so I think I just instantly went bearish. But in hindsight, I think I just gotta ignore FA and do my own analysis because you can clearly see we're below all the true opens. We're using a 1 hour reclaimed for value gap. 1, 2, we used it once, twice, 3 times, 4 times. So if it's used 3 times or more, I refer to that as my supercharged gap. 1 hour supercharged for value gap. We ended up getting SMT here with this low. I mean, when you really look at everything, it's like, dang, I was just super offside. Like, it's not even funny. Like, this was just myself being wrong here. Why was I bullish, or why was I bearish? Because we were below midnight. We manipulated true week open and true session open into this gap. We have a data high above. Yeah, and then I think we might have even had London highs above as well. Oh yeah, because we had a previous day high SMT. Interestingly, the previous day's high SMT stayed intact. We actually kept it. So I was right about that, which is the cool thing, right? I was right about that, and that we did go to previous day's low. But just because we had a previous day's high S&T didn't mean that we had to go right up to that high. We ended up First running the data high and then running to, looks like maybe this was London or something, Asia high. Yeah, I think the main reason was also we had a London SMT. But once again, recency of SMT matters, right? If we get a more recent SMT, it's going to override the previous SMT, right? So remember that. Remember the recency of SMT because it actually makes a big difference. So anyway, Asia high there, bang, and then we went up to it. So yeah, yes, we had a London SMT here. But magneto effect, right? We have a more recent SMT, and we have a data high. And that matters a lot. So let's go ahead and mark that up, right? And let's actually mark up the old SMT, right? Because we, it's helpful to really show like the learning experience, right? We have an old SMT here with ES. This is the old SMT. This old SMT becomes the new draw on liquidity, right? Magneto effect back up to that high. Let's make this you guys see what I'm saying though? And then boom, we run back up to the old SMT because we have a new SMT. So recency of SMT matters. We were below all. We got magneto effect back up to the old London SMT. We were below all the true opens. Why was I still bearish? Right? It doesn't make sense. It just doesn't make a lot of sense. I was definitely offside here. And then yeah, the data high above. Right? It's very logical. When you really look at everything, it's like, wow, that actually makes a lot of sense. Like, it really does. So let's go ahead and screenshot that. And what? Today was Wednesday. So we'll just be like, why was I offside? Or no, we'll just call this screenshot why was I bearish? Because it genuinely, there was no real reason to be bearish. We ended up getting a 5-minute pin bar here. I love those pin bars, man. Shout out FA. So that pin bar was pretty nice. And we ended up having a whale that sold within this candle here. So this pin bar is stronger because this whale just sold, right? So I'll show you guys over here. Right? So whale sells, below all these lows, boom. We know that that guy just got liquidated. Okay, we sweep him out. 5-minute pin bar forms. Okay, cool. Now, with this 5-minute pin bar, let's actually see if it was a PSP. Dang, bro, it was. I'm really realizing the power of PSPs, honestly. And yeah, 22 whale sells here. We get a 5-minute precision swing point, delivering from this 1 hour supercharged gap. So you could consider this. What do we call it when we just have a pin bar with a higher time frame for value gap? Because we discussed the different things we could do. We said if we get a pin bar off a new day opening gap, it's hand of FA. If it's a precision swing point off of a new day opening gap, it's seal of FA. But what if it's just a regular for value gap? It's a 5-minute pin bar off a regular for value gap. I think we'll just call it flow state, honestly. I think we'll just call this flow state. Flow state, but we're using a precision swing point. That's sick. That's actually sick. We're aligning so for flow state we're aligning a higher time frame for value gap with a 5-minute pin bar. Pretty cool, right? So, boom, there's the whale market sold. So, yeah, genuinely, I would consider this flow state and then run this up to the data high as well, magneto effect, right? Boom. Honestly, I might just, for magneto effect, I might just do like a whole bunch of lines. I kind of like that, dude. He's just going to show like that's the liquidity. Or maybe I just have it be like this. Alright, anyway, I want to screenshot this. Flow state using a pin bar. Pretty cool. Bang. That's a 5R. That's pretty sweet. What time was this at? 8:50. That's awesome. Bang. So 850 magneto effect. Wait, no. It's just a flow state. Flow state aligning a 1 hour for value gap with a 5-minute precision swing point or 5-minute pin bar. That's pretty sweet. Let's put this in trades for today. So so it was actually flow state. It was actually flow state. 1 hour fair value gap aligned with 5-minute pin bar. And we had Magneto back up to the old SMT. Plus the whale that sold. Okay, so that is pretty cool, right? I honestly I want to utilize SB Pro X more. I think we can also find a trade using this guy who market bought at this outside bar here. I kind of want to look at that. So this was right at 7:30. Or I mean 8:30. This is an interesting situation because I would have expected him to get liquidated all the way up there. Let's actually turn it to the 15-second. Let's get a better idea of, like, did he get liquidated up there? Where exactly did he get liquidated? We gotta go all the way to 8:30. What the? Now there's way more orders. Was this today? Nah, what? We're looking at like a ton more orders now. What just why is there so many more? Oh. That wasn't today. Oh my gosh. I was like, what? I was so confused. Okay. That wasn't today. That makes so much more sense. I was like, I was about to lose it. So, dang, bro. He became liquidity. It was at 7:31:15. I don't really know how to trade that one. I mean, we do have the 2-minute outside bar. So maybe you could take this 2-minute outside bar on news. Honestly, that might not be bad. Right? And this would be more of like a scalp, but it's still a decent scalp. All of this is accumulation. We have the true opens. Yeah, sometimes some trades are just better taken as scalps, honestly. We have a sweep of all these equal bodies. And then boom. Yeah, liquidity sweep. So this is all like accumulation. And ignore this, right? And then we had a whale that market bought into the outside bar. So I mean, sometimes you want to see market selling into the outside bar because you know that that's smart money, but I don't know. It's just pretty clear that this guy was just dumb. He bought right into the outside bar. And so we know, okay, well, he's probably going to be liquidity down here. Then, yeah, just take this as a scalp down to these lows here. That's what I would do. equal lows-ish. So this is my Cantina, what's it called? Cantina kill shot. And then maybe you just go for 1-to-1. Yeah, it's probably the best way to do it. Bang, and then delivery lower. I mean, I'm gonna write a note in my phone. Hang on. Hey, Fa, what up, bro? Hold on, I'm just making a note in my phone real quick, because I want to remember this. It's just like every time I get an idea or like think of something, I write it in my phone so I don't forget it. Oh, I already got SP Pro. I already got it. It's all good. But maybe for next year. But dude, oh yeah, I forgot to screenshot this. I know this one's not the greatest trade, but I just wanted to show that, like, technically the scalp, if you took this as like a very low time frame scalp, this would have played out to this equal lows. Yeah. Yeah, but dude, thanks for thinking of me. I appreciate it. But dude, it's very very helpful. It's very important, honestly. So this was 832 Cantina kill shot. Meaning, why do I call it that? Because it was right at news. So we had an outside bar right at news. That's why I call it Cantina kill shot, because it's just the nickname I gave it. But just an outside bar. 832 outside bar Cantina kill shot, and then yeah, this was on the 2 minute. Nice little scalp. Anyway, let's look at something else now. But yeah, it was pretty clear why I was offside. I mean, you look around and you realize, dang, we just had a giant 1 hour gap, and then we held it. Okay, let's actually keep the true opens on the chart real quick. I want to look around right now. I really like using SP Pro X, finding the whales, and then finding a trade based off of what the whale did. Most of the time, the whales in SP Pro X are gonna be usually dumb whales. From what I've seen, like most of the time, you want to like trade against these random crazy market buys. Well, this guy was actually pretty smart. He market sold the top, but a lot of times it's not like that. Well, yeah, like this guy. And this guy. I don't know how this guy sold the top. But anyway, yeah, we went up to Asia high, went up to data high. What other trades do we have here? This 5-minute outside bar is nice. That was at 6 a.m. But it's a nice outside bar. I would take this every time. That's a nice outside bar. This 5-minute outside bar actually did not really deliver us to that low, and I kind of thought that would, but in hindsight, once again, we had a giant 1 hour gap, which is why we kind of didn't continue. And it was just not. It was against this propulsion block that I already have marked out. I'll show you guys. Oh, you can't see my screen. It was against this 5-minute propulsion block. So, okay, what do we look at next? Was it, let's see if there are any new day opening gaps or new week opening gaps. Yeah, so we had this one. We had an event horizon there. We actually might have had like a 5-second outside bar off of it. Ooh, now I'm curious. Hold on, I'm way too curious now. We might have had a 5-second outside bar here off of this right at news, or it might even have been a 1-second one. And if so, that once again, that still valid. Right? What a crazy violent move. It's not really an outside bar though. Nah. There's nothing there. But yeah, we're below the true opens. Honestly, it really does make a lot of sense what happened. It really does. Like, I want to sit here and be like, oh, well, this is why this happened. It's like, well, or you're just offside, right? Anyway, where's the first line for value gap? I think there was a good trade off of it. I think at this point I'd already taken my trade, but honestly, I should have been a little bit more patient. Where's the first line for value gap? Boom. So it was right here. Yeah, so there was definitely first strike to the downside off of this first center for value gap. What a cool trade. There was definitely first strike. We had a first center for value gap right here. Right? And we were utilizing the new week opening gap. Right? So this was being used. And we had an SMT. So this was kind of the trade that I took, but I entered it on the too high of a time frame. That's the issue. So boom, 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 boom. Right, rejection of this new week opening gap. And then we back test the first was in it for value gap. Boom. So yeah, so we get this sweep into the high, and we had some kind of SMT. I think it was a SMT with this high, with Asia high. Oh yeah, it was SMT with all of these highs. right? So the mistake I made with this short is um it was too high time frame of a short for what the move was allowing. I was trying to do a 5 minute short when really there was only when I should have gone in on a lower time frame entry, honestly. I think I was trying to get in on a 3 minute when I should have been getting in off this percent for value gap. So let's drop down to like the low time frame so we can actually see this trade in action. And then we'll check to see if there was a whale. Right, look at that, relatively equal highs. Soup. Check the true open, the low time frame one. $9.50. Oh man, there's not one. Either way though, it's still nice. So the trade I took was too high time frame for what, honestly, what the move was allowing. Trade I took was on the 3 minute when the retrace was more of a retrace on the 15-second. The trade I took was too high time frame. And we'll look at this whale that bought into the first center for value gap. I think if we'd seen that live, we could have caught a really, really nice first strike here. Really, really nice. So the trade I took was too high time frame when the retrace that was happening was more of a low time frame retrace. So I should have got in right when we come back up and use this first center for value gap, and then we actually get a change state delivery here. Now it comes with a wick, but you can still tell that this is gonna be like you can just tell based off of this guy. Let's actually turn this to the 5-second. You can tell this trade's still gonna work because even with this wick because of the whale that market sold. And I think we had SMT with this high as well. It's so cool how the market's so adaptive. Like, we can see, oh, wow, that whale just market sold. Now we got to get in on shorts. I mean, market bought. All right, so let's go back it up. Back it up, back it up, back it up. What time? Yeah, so you can see here that here's where the whale gets liquidated within this candle or something like that, right? So now we need to use him as liquidity. So we pop back up into this first center flag gap. Higher time frame, this new week opening gap's holding. I think there was bearish SMT with this high. Yeah, look at that. This is probably trade of the day right here. Delivering from this higher time frame new week opening gap. Wow, that's really cool, honestly. So, yeah, I think this is trade of the day, honestly. And then, yeah, Will comes in. Market buys into the pump. Once again, I know there's a wick, but honestly, with the whale market buying, we just can tell we're gonna, and with just the fact that it's a low time frame, it's low time frame, you can honestly. Here, let's make a note of that. Yeah, there's a wick, but with the whale market buying, increasing our conviction, and the 5-second being kind of erroneous, it's honestly still a great trade. Right? So 5-second change in state, treat this as void because look at how fast we went up, right? And then target these lows, market open lows. Such a clean, obvious target, right? First strike down to market open lows. That's where you want to go right there. That's where you want to target. Bang. Relatively equal high sweep. So you kind of seeing what I'm seeing here. And then, like I said, yeah, a little bit of a wick, but honestly, it's not that big a deal. And then here's our draw on liquidity, market open lows. And bang, bang, that is a sniper trade. You could do stop loss here, here, a lot of different places. I guess I'd go here. It's probably the safest bet. I like that. Yeah, I like that because then we can line, it gives us 8 projections. And you could just target this low as well. Obviously, you'd scale out. What a killer trade. This is definitely more of like it's a reactionary like kill shot type of trade because you understand like okay we have accumulation, we have manipulation, we have the first center for value gap. Let's see how we interact with it, and then you you just react. It's just pure reaction, right? I really like this trade. I wish we had a true open here. I mean, we do over here, but anyway. So this is just clearly accumulation, right? This whole thing. That's manipulation. Right? And then pop back up into the first center for value gap. We see the will. Market executes 22 cons. We know, okay, that guy was kind of dumb. 5-second change stayed off the first center for value gap. Down market open lows. Bang. I think this is the trade of the day, honestly. And then you could just go break even, like here at the volume imbalance. Or maybe here. And then obviously scale out. So like you could do like TP1, TP2, TP3, TP4, right? Such a sick trade. So cool. All right. Bang. So, what is this? 946. Right at 946. There's a close. Bang. 9:40. What day is this? Wednesday? Or no, what time? Yeah, I have the date right. Okay. 9:46. First strike. 1 minute aligned with the 5-second. Very difficult trade, but very cool trade. Oh, I forgot to mark the S&T out in the sweep. Hold on. We're not done. We're not done. All right, we had a low time from S&T with ES. Just beautiful. And then relatively equal highs. And then we obviously sweep out these highs. So dope. All right, here we go. 9:46. First strike. First center for value gap aligned with the 5-second. And it's actually right at 9:46.00. All right, let's go ahead and save that. I have to use the bathroom. I'll be back. obviously this is a very difficult trade, but if you're just super reactionary and can see all this super fast, you see that market buy for 22, and then you can just process it in your head, like, oh shoot, we're getting SMT, we're in the first center for value gap, oh shoot, the guy just market bought. Get ready, 5-second change state, bang, down to market open. So anyway, this was probably a 2022 model. Maybe on the 1 minute or the 30-second. We'll have to see. Yeah. Yeah, so sometimes you just gotta look at the low time frame, and the low time frame kind of just gives you everything. I think you can see here it's just like, well, we swept out market open low. One of the nicest draws on liquidity in the market, right? Then let's see if we have SMT. The thing is, we are above these true opens, but I think we manipulate 922 at least. No, we don't. Dang. It's kind of a surprise, honestly. Well, let's see if it's a 1 minute gap. Yeah, so it's a 1 minute Venom model. That's what it is, right? We get a liquidity sweep. It's right in the macro. That's probably a big reason why as well, is we're in the macro. So there's the start of the macro. Here's the end of the macro. Once again, I consider macros from the entry to the draw on liquidity, so I'd go like that. And then what the draw on liquidity was Asia high for sure. Yeah, clearly the draw on liquidity is Asia high. And let's move these out of the way. Boom. So there's our macro, and you can just see how this is a Venom model, right? Where sweep of a significant low, and then what happens? Let's actually go back to the 15-second. Actually, no, first let's mark out the Venom model on the 1 minute. Right? Boom. Here's the high, or the low of the BPR. Here's the, hey, watching from Singapore, let's go. Dude, that's great. At least someone's watching. Hopefully you're doing good, man. Hopefully you're doing good. You can see how this is the macro, right? And then we have a BPR. BPR. What is that? That's Venom model. Here's the Venom BPR high. Here's the Venom BPR low. So the low of the BPR is going to be your order block entry for Venom model. The high of the BPR is going to be your IOFED entry, right? So mark this out from here to here. Boom. Venom model, man. Look at the RR you can get on Venom model. It's pretty cool. So here's Venom candle. Right? And the important thing is that we really do sweep out a key liquidity pool, which in this case we do. We sweep out market open low. So Venom candle. And let's also check order flow to see if we had a whale market sell, because if so, that's going to be nice. and then here's your IOFED entry. So in this one, we do not get filled at the IOFED entry, but we do. What are we backtesting? We're just backtesting. We're backtesting just trading, bro. Like literally just different trades you could have taken today. And the way I trade is just all aligned with AMD. So liquidity, understanding liquidity, targeting old highs and lows, and identifying manipulation, and then taking an entry to get onside with the market. That's really all it is. I mean, there's a whole bunch of different. You might be wondering, what's the strategy? There's a whole bunch of different entry models, but all within the same idea of we're just targeting old highs and old lows in the market. Okay. Yeah, Venom candle. Boom. There's your institutional order flow entry. Yeah. Hopefully you're doing good, bro. Once again, this all occurs within the macro. We sweep out these market open lows. Bang. Right? So here's your accumulation. Here's your Venom model. And then Asia high, right? All occurs within the macro. And we got a whale that market sold 20 cons at, check this out, 857. 857. He sold 20 cons. Perfect for us because now he's a confluence for our trade. So you could have even entered it a little late once you found out that whale market sold. You're like, oh, bet. Alright, so it's a 1 minute Venom model. We'll take screenshots of both time frames here. And all of this is just clear accumulation. And then we run it back up. What is VC? So this is just a 1 minute. This is just a 1 minute order block. So when I mark out Venom model, what's Venom model? It's just a BPR, but specifically that it takes out some kind of key. Oh, you can't see my screen. Sorry. What's Venom model? It's a BPR where you have the left side very violent and aggressive, the right side very violent and aggressive. So overlapping fair value gaps, a bearish fair value gap right here, a bullish fair value gap right here, where they overlap, the left side and the right side. That's the BPR. The bottom, this is called the Venom candle. This is the order block, and you want to see it take out a key very important low, right? Draw on a very important low. In this case, market open low gets taken with this, with the Venom candle. Basically, it's called like venomizing the stops. We have the fangs, right? Left Sibi, right Visi, overlap. That's your Venom. That's your Venom BPR. The top of the BPR is going to be your institutional order flow entry drill entry. The bottom is going to be your order block entry. That's the Venom candle. And then right here, you want to see it sweep out a key low. And so that is what you see here. Is we sweep out market open lows. Boom. Right when we tap that, we go up. So let's also mark out the whale market sold. What indicator are you using to see whale entry? So you have to pay for it. It's really expensive, and well, not super expensive. It's actually pretty cheap compared to the information I'm getting, but it's just SB Pro X, and you can get a week trial. So SB Pro X, and I'll have to make a video showing how to set everything up. But it's actually really important and helpful. So right there, the whale sold 20, so we know, okay, perfect. He's going to be our liquidity at these highs. So, and basically what this is showing is it's showing me the biggest market orders that hit the book. So if I see an anomaly in a market order where a whale market sells at a bad time, I know perfect. The smart money, smart money is not going to just not see that and not trade against him. Is it your own narrative, your model? It's just understanding of liquidity concepts and smart money concepts, and basically just understanding that the market's going to run through old highs and old lows. to generate as much panic as possible, and then frame AMD and then trade within that context. And then the best part about this is the true open. We actually perfectly manipulate that, huh? Yeah, that is real nice, right? Within this candle here. Yeah, of course, bro. Let me know if you need anything, bro. Every day, I backtest, trade live, try and get a little better every single day. And so, just one step at a time. Just keep grinding, man. Keep grinding. But see how the true open is helpful to identifying manipulation, right? Then we get the Venom entry, and then Asia high. All this LRLR here. Boom. 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 Yeah. So let's mark the trade out, right? Let's project out. Dude, TJ's family was rich even before he started trading. Well, that doesn't mean that he didn't work his butt off, right? And also his family didn't necessarily give him anything. It doesn't matter if his family's rich if he is still broke, right? So you can make that argument all you want, but if your family's rich but they don't really give you anything, then that's not really, that's not really rich. Like, I get why you think that that's like an issue, but it's really a non-issue because he still did everything on his own, and he built his brand from the ground up, in all honesty. Boom, LRLR, and then yeah, let's just say we took this up to Asia high. And then stop loss below the manipulation. Let's check to see if there's SMT. Yeah, there's SMT with this low right here. So it's a 22-minute SMT. Bang, bro. What a cool trade. What a cool trade. Man, I can't believe I traded so bad today. Makes me mad. It's like there's so much opportunity, and I just gotta catch one good opportunity every single day and not screw it up. But it's all good. And then, yeah, let's get that whale emoji back. Boom. Boom. There's that whale. Uh-oh. We got a whale that we got a guy that's going to become our liquidity. Bang. And you might be wondering, why are you looking for the whales to become your liquidity? You have to understand this from an institutional perspective, because the institutions, they are looking for the biggest dumb money. They're not looking for just the regular retail dumb money. They're looking for the biggest dumb money, and that's how they're gonna trade against, is the biggest dumb money. So you want to see these whales that randomly market buy with a ton of money, and smart money eats that up. They eat that up. So you might be wondering, why do you care? Why wouldn't you trade with the whale that market sells? And it's actually, you do sometimes. It just depends on the context. But in this case, we know this guy is a dumb money, and because he sold into this, and so we know he's going to be liquidity at Asia high. It just depends on the context. It's kind of confusing a little bit. So it's a little confusing, but I'll make short form videos about it and stuff. It'll be good. 9:55:30. 9:55:30 Venom on, I think it was the 1 minute. Yeah, let's save that. And then we'll also show the 1 minute version. Because the 1 minute, when you see it on the 1 minute, it's like, oh wow, that actually is really light bulb, right? All right. So, yeah, 9:55. 9:55 Venom model on the 1 minute, number 2. Okay. I want to share these ones. Beautiful Venom model. So, what else was I gonna mark out? I don't remember. Oh yeah, I kind of want to switch this actually, because this is supposed to be 22.5 minute SMT. Let's delete this. Yeah, pretty cool. We could even go on the low time frame, right? And we can say, is there a low time frame change in state off of this, right? And then you can get super, super precise with this. Super, super precise. This is the beauty of being on side with the market, is if you're on side with the market, you can just pyramid on pyramid on pyramid and then make crazy money. So Asia high, bang. And I'll have to make a video on that as well, what I mean by that. But yeah, the hard part is getting right, but then once you're right and on side with the market, it's like, that's crazy powerful. So he market sells into this dump. We actually have a 5-second CSD off the 1 minute Venom. Never backtested this before, but it's the same as my 2022 plus essentially. So I'm just gonna call this Venom plus, because we're just taking a low time frame change in state off of the Venom, which is, so it's the same as my 2022 model, just aligning time and price to the seconds, right? And we just know this is gonna be good because this whale sold into it, right? Yeah, bang. These are the type of trades that I want to practice in like off stream, just in practice, because I think, like, I don't know, it'd be so cool to be able to catch trades like this, you know? But I would not take these on stream, or like I wouldn't take these on a sim account and stream, but I would definitely I definitely want to practice these, and so I'll have to do it off stream, but it's still pretty cool. And the last thing I will want to check about this Venom model will be to see if this was aligned with a GB partition. Okay, 957.05. 05 Venom plus 1 minute Venom. Oh, let's actually show that this is a 1 minute Venom. So bang. Nine fifty seven 05 Venom plus 1 minute aligned with the 5-second. Bang. Pretty sick. Okay. Yeah, that's awesome. Okay, yeah, let's check Goldbach. And it might be within a Goldbach partition. It just might be. Oh, we need to turn this down. Oh, I have a feeling it's gonna be lining up pretty nicely. Oh boy. Oh boy. Oh my gosh. That's pretty cool. Now, I will admit that's not really perfect. You can see. But we sweep liquidity into the dealing range low. It's close to the Venom BPR, and then we tap the OB partition. Yeah. It's not perfect, but it frames the market maker model decently well. We sweep liquidity into the low there. We run into the high. I think it is, somewhat helpful. If you just see a sweep liquidity into this low, it's like, okay, that's nice. Then Asia high. Since it's not really perfect, I'm not going to record it. I mean, technically, this is also a BPR. Oh, look at that outside bar on the 30-second. Yo, we gotta talk about that. What time did that happen? 9:57? Hold on. That's crazy. 9:50. What time did this close? Nah, we're gonna switch this over to looking at this outside bar now, actually. This outside bar is awesome. Can our entry be on M1? Yes. You could just take the 1 minute. You could just enter on the retest of the 1 minute BPR. Yes. I just like looking at the precision in these markets, right? And I just like looking at it. But yes, you could just take this as a 1 minute retest of this Venom model here, and that's fine. So, okay, this is really cool. So, check this out, right? Let's figure out exactly when this candle closes. This candle closes at 9:57. 9:57. And then if we look over here, this candle, that's so interesting. 9:57. So this closes, and then within the next second, the whale. So the outside bar closes right here. Within the next second, the whale market sells. Oh my gosh, that's like that's like that is like basically like that is so funny. That's like the I'm trying to think of an analogy to explain how crazy that is. Um that's like the IRS coming to your door and doing your taxes for you. That's like That's like I don't know. There's a million examples of what this could be. That's like they literally came to you. The entry happened, and then they market sold after the good entry. That is hilarious. I'm trying to think of a better example. That's like that's like you want to go out to eat at a restaurant, but the restaurant actually just says, actually, you don't need to come in. We're going to bring the food to your house and cook it for you at your house in front of you, and then you don't even have to pay for it. The food is free, and we're also going to get the best chefs in all of America, and we're gonna come to your house and cook it for you. You don't have to pay. That's what it's like. It's like this whale, this guy, Mark is sold into the outside bar 5 seconds after we get it. Bro, he came to us. He came to us. That is hilarious. So yeah, if you see that in a real trade, that is just hilarious. He literally sold after the outside bar. Oh, that is funny. So here's the outside bar, right? We have a prior candle, the low and the high of it get taken. And then we close with a nice close. Now we do get a little bit of drawdown, but still valid trade, still worked out. That's why you have a stop loss where you have it. I think the reason it worked out so well is because like within that move down, it's like, oh, like people realize within 5 seconds like that guy just did something really stupid. So project that out. You target 4 projections. You could target Asia high, either one. Honestly, I'd probably just target Asia high. I would scale out. What a beautiful trade. I mean, we go up AR. We do. We really do. That is so sick. You guys see how we use the whales as confluences, like to get onside with our trade? Dude, that is so cool. and you could go break even at, literally you could go break even at this high, this high. I'd probably go break even at like 0.25 of that rejection block or something, like within here. I think that's a reasonable spot to go break even. Something like that. And then, yeah, break even right there. And then, yeah, dude, I mean, you just scale out here. You just scale out. What a sick trade. This is trade of the day. This is trade of the day, 100%. Jeez. I love this trade. We could also record the different TPs. 957.30 outside bar. On the 32nd. So yeah, let's record the different TPs. Let's just say maybe like TP1 here, because there is kind of a gap, but not really. TP2 at the end of the LRLR. Then I would honestly trail the rest. So like TP1 trail. TP2. Maybe move TP2 trail up a little bit. Maybe not. No, I would just keep it. So TP2. The will push down price, and then go in his intended direction. Oh, poor whale, dude. Poor whale. Wait. The whale pushed down price to. Oh, you think he? No. Because if a whale really wants to get in the market with a lot of size, they need to get in with limit orders. So the real whales are actually filling limit orders all through here. This guy that market sold into this outside bar, he was just a dumb whale, right? He market sold into the outside bar, so we know, okay, well, this guy's going to be our liquidity at Asia High. And institutions are looking at that, right? Because they want to find the biggest dumb whales. Because the biggest dumb whales are going to give them the most money. Simple as that. And then Asia could be TP3. And then, honestly, I think what you do here is I would do when you hit this high, replace TP3 with stop loss. Or no, actually, no. I know exactly what I would do. So Asia, TP3. And then for a TP4, I would target 7 projections of the outside bar. And with TP3, if you were fast enough, you could remove the TP and plop in a trailing stop. Just kind of depends. Though. You have to be super fast. And then yeah, I would say the rest, you could just leave it to go run 7. I'd say final target could be 7 projections if you wanted to. And once again, you could be trailing this whole entire move. So when we hit this high, I would do remove TP3, add TP3 stop loss. And then put the TP3 stop loss probably below this low. So sick. Now I would take profit. Okay, nah, I changed my mind. I'd actually not do that. I would allow myself to take profit at Asia high, and then I would just take the rest off at 7 projections like this. I changed my mind. Do you take partial along the way? Yeah, that's what these TP1, TP2, TP3, TP4s are, right? And I'm trailing as well. I'm trailing aggressively. This is how I can allow myself to lose a lot, but then when I have big winning days, I have huge winning days. So, yeah, guys, what I would do is I would actually put in the TP. So when TP1 gets hit, I trail. TP1 trail means the rest of the cons. I move that stop loss up for all the rest of the cons. Once TP1 gets hit, all for TP2, TP3, TP4, the break even point or the stop loss, I move it up to here. When TP3 gets hit right here, I'm moving the stop loss up again for TP4 to right here. So I'm preserving gains throughout this whole move. That's why. So this is exactly how I would execute it. Now you could do the replace TP with the trailing stop here and see if the rest go to TP4, but I think that at that point that's personal preference. All of this is personal preference, but this is just how I would do it. And I like to mark it out, guys. I like to mark out exactly how I would execute it in my backtesting, so that way, in my head, when I'm trading live, it's all already in my head from my backtesting. Like, okay, I already know exactly where I'm supposed to put the trailing stop. I know exactly where I'm supposed to partial, just because it makes it easy for me, so I can just do it live. So 9:57 is when we get the entry. 9:57. And this is on the 32nd. Number 2. And I actually recorded the last one wrong. Boom. Let's put that in there. Outside bar. 9:57 on the 32nd. This one, in my opinion, was trade of the day. Optional way you could take it if you want to be like me and preserve gains while capitalizing on the whole move. All right. Hey, wait, someone leave a heart? I think so. Let's go. Okay. Yeah, this was so sick. 30-second outside bar was just beautiful. Let's post this as trade of the day, honestly, because this really was trade of the day. Um, should be for Wednesday. Trade of the day, Wednesday, 9:57, 30-second outside bar. Market, open, lows, swept. 22.5 minute. True open. Manipulation perfectly under 22.5 minute. Delivering from a 1-minute venom. Obvious AMD. 950 to 10 macro. Sick. Oh, I forgot to include the whale. Whatever. It's fine. Okay. I might take another break, guys. I might take another break. This is a pretty productive backtesting session, though. I'm not gonna lie. Yeah, I'm gonna go take a break. Dang, wait, I've gotten 7 subs since I started the stream. Bro, I just joined your Discord. Cool. Awesome, bro. Yeah, dude, that's exactly what it's for. Just to have people to talk to about trading and hang out. I remember back in the day, I had no one to, you know, talk to about trading, and it drove me crazy. And anytime I had to, or anytime I wanted to try and have people to talk to about trading, it was like behind like a paid server, and I'm like, bro, I just want people to talk to in trading. And then I made my own server, and now that's exactly what it's for, just to have people to talk to, share ideas, learn from, and yeah. So I'm glad you joined. So, let's see. What's so interesting is we had another whale market sell here. This is so funny. He basically this whale that market two whales. Oh my gosh. These two whales that market sell here and here, they made this move happen. They're the reason why this move got so bad. Look at that. They sell when we get this aggressive displacement, and what's very interesting is you can mark this out as like your Reaper gap, right? So let's actually go down to a low time frame and find that. Interestingly, actually, it's a first win for value gap inversion. Yo, wait. It's a first presented for value gap inversion. Same trade I took yesterday. And what's so interesting about this is these whales market sell into the retest of the first one for value gap inversion. That right there, if that's not a confluence for an entry, I don't know what is, right? So we got whales that market sold. Hold on. Whales that market sold into the retest of the first one for value gap. What does that tell us? They're going to be our liquidity all the way up here. So take this first one for value gap inversion, maybe on a retest, right? I maybe put stop loss here. With two whales that market sold, one for 43, and another, when you know how to trade, it becomes boring. Real. This is so real. And then where would we target? I think we would probably want to target this consolidation, kind of find where's the point of control of this. That's probably what I would target. Hello, what's going on with my volume profile? Why isn't it working? Volume profile, hello. Okay. So I would just, yeah, look at that. Look at how perfectly that's a good place to target. So I would just target this. Bro, what is going on with my chart right now? It's glitching. Okay. So yeah, that's kind of how sometimes when there's not really a specific high to target, I'll still find a draw on liquidity is using that volume profile tool. And then boom, right? First limit for value gap gets inversed, gets retested. We already know we manipulated these lows. We already know we have this. We have this. And then the whales market sold into our first limit for value gap inversion. That could not have been more dumb. That was literally, once again, like the restaurant coming to your house to cook the food and says it's free. They literally came to us. The dumb money came to us right after the first presented for value gap inversed. They made it easy. They said, here, have our money. Have our money. So yeah, I'd enter on the retest of that and then run this up to this liquidity pool, which is 7 projections of the outside bar. This is more of a scalp type of trade. Still a good trade though. So if you guys don't know like what I mean by first center for value gap inversion, when we close above or close through the first center for value gap, honestly, no matter when we do, actually, it'll work even onto the back down. It'll work even back down. But when you close through it, it's just like a regular inversion for value gap, but honestly, a little stronger. And you don't really have to wait for the highest time frame to close because it's the first center for value gap. It's just so strong. So when we close through it, it's just a really good entry. You could enter on the close, but also the retest. Same with any other regular fair value gap, inversion fair value gap. And so we enter on the retest. We see the whales market selling into our order. We're like, oh, bet, okay. And then run this up to the opposing liquidity pool, which is these highs. So, bang. And it's already in line with our macro, AMD, market open sweep, Venom model, and everything else we already analyzed. So, bang. We could even probably find a first strike off of this where we get a low time frame change in state to the upside. 959. 959. First presented for value gap inversion. Oh, we forgot to mark out where we go break even. Wait, let me actually delete that. So with these, you pretty much can go break even pretty soon because there's no reason for us with these moves. They're usually pretty violent, so you can go break even reasonably soon and usually be fine. So I go break even at that high, and then yeah. And then as well, you could have entered on the close, so we'll mark that one out as well. First presented for value gap inversion on the 1 minute, obviously, because it's the first presented for value gap on the 1 minute. And then let's just say that we took it like this, right? Same thing, we just would have entered on the close. That also is fine too. 959. First presented for value gap inversion, 1 minute, number 2. And let's see if there's first strike, right? So if you don't know first strike, we look for the first presented for value gap to be interacted with throughout the day. When it's interacted with on the low time frame, the 15-second or the 5-second, yes, you can use either time frame for this, and I promise you this is going to work. If you don't believe me, you're going to have to back test it. But look for low time frame change in states off of interactions with the first presented for value gap. And here looks like we get one right here. We backtest it. Once again, we know that the whales market sold down here, so they're not going to take it back below those whales. So we just put our stop loss below where those whales market sold, and we're basically good because we know they're not gonna let the whales get back in profit. The dumb whales. And then yeah. So here's my first strike model. Bang. Up to, once again, that liquidity pool. And that's actually pretty nicely for projections. You could have stop loss a little lower. You know, it just kind of depends on where you want it, really. Honestly, you could definitely have stop loss here, and that's reasonable, right? I think that's actually very reasonable to have a little bit more wiggle room for yourself, and then break even same place, or at this high, or this high. Maybe honestly at the bodies here, and then bang. Same thing. Which date? This is today. We're looking at today. This is right at 10 a.m. 9:59:40 on NASDAQ. Okay. What a sick trade. All right. $9.59.40. First strike. 1 minute line with the 5-second. And then bang. And yes, I will use the first position for value gap even after it's been inversed. I'll still use it for first strike. Wait, did I ever say if we get a pin bar off of it, is that gonna be hand of FA or is that gonna be a first strike? I forgot. What did I say I wanted to do? So if you guys don't know what I'm talking about, basically there's like 4 different ways you can leave a key level. You can get a change state delivery, you can get an inversion for value gap, you can get a outside bar, you can get a pin bar, you can get there might be another one I can't remember right now. I think I'm gonna change it though. I think if we get a pin bar off of the first line for value gap, I think I'm gonna call that first strike. Yeah, honestly. So, and then if it's a pin bar off of anything else, like the Reaper, the new day opening gap, new week opening gap, event horizon, anything else, I'm gonna call it uh, hand of FA. And if it's just a pin bar off of a regular for value gap, pin bar, outside bar, inversion for value gap, or CISD off a regular PD array on the aligned time frame, or close enough, then that's gonna be flow state. Sorry guys, I just like to make notes just to remember stuff for later, but it's important. Sorry, my mind went on a little tangent there. All right. So yeah, 9:59:40 first strike. 1 minute aligned with the 5 second. Okay, so let's go put this in trades from today. 9:59. 9:59:40 first strike. 1 minute line with the 5 second. Whales sell into the retest of the first presented value gap inversion. Jake, what did you do this weekend? Great question, bro. I think I just backtested. I don't do much, bro. I just work. I work and then I work more and then I backtest and then I backtest more and then I work on my videos and I work on YouTube and making more videos. Dude, I don't know. I don't really go out. It's kind of sad, but it's just what I do. I don't know. But but yeah, I did I do anything fun? I might have done something privately. Uh, I don't know. I might have probably just did something with the fam. Honestly, I really don't know. I really don't know. Okay, I like this pin bar. I'm so curious if this pin bar was a precision swing point. Let's check. You can see how nice the pin bars are. You get in entries when everyone else can't. We get a retest of the first line for value gap. Let's see if it's a pin bar. Okay. Would you rather make 1 million from trading for yourself or help 10 people make 100K? I I want to help. I'd rather help 10 million make 100K or 10 people make 100K. But what was I going to say? Um I mean, yeah, for sure helping people. Like once I make like enough money to just be set with trading, my goal is just going to be helping as many people as possible. That's really going to be my goal. Honestly, is just helping as many people also make it. But, I do want to make sure I'm, set well off and set as well. What is wrong with the chart right now? I can't even scroll over. What? Okay, Trading Views glitched. Hold on. Load. Okay. Now we gotta go all the way over, find if that pin bar was a precision swing point. Where is it? We have to go back kind of far, huh? There it is. So, right here. Wait. Oh wait, that was a precision swing point. Yo, okay, that's cool. That's cool. I wasn't meaning to look at that one though. I was meaning to look at this one, but this is a precision swing point. This is a precision. Yo, we gotta back it up. We gotta back it up because we gotta talk about this. That's fire. So this is Venom Plus. But this is an even better entry where you get a precision swing point. Bro, and then the retest of the precision swing point. Oh my. Yo. What's your goal to amount you want to make consistently? Eventually I want to make probably a few hundred a day. I mean, I know that's kind of aggressive, but that would make it so I'd be pretty set, I mean, I made a 100 a day on Monday and Tuesday, over 100, so that was pretty cool. Yo, this is so fire. So I would consider if it's a precision swing point, if it's a for Venom model, if it's a pin bar, outside bar, pin bar, PSP, pin bar, outside bar, IFG or CSD off a Venom on the aligned time frame, then it's going to be a Venom Plus. And if it's off of a 2022 for value gap, outside bar IFG CSD off a 2022 for value gap on the aligned time frame, it's going to be 2022 plus. PSP pin bar. PSP pin bar, outside bar inversion for value gap CSD. Alright, perfect. I got it. Oh, I gotta text someone back. Hang on. Alright. Bang. That is so sick. And then you could even enter on the retest of it too. Once again, remember the whale that sold here? We talked about that whale. We said, bro, sold right into our entry. Well, here's another one, right? He sold, or here's another entry, right? Well, anyway, I don't need to mark it out right now. It's fine. Right on that close, you could have entered. Bang. So sick. Whoa, that's 23 risk reward? Whoa. Whoa. That doesn't seem like it's that crazy, but I guess, wow. Dang. That's 23 risk reward. Holy. What the heck, bro? It's 23 risk reward. If you took it all the way up there, obviously I'd scale out. $9.56.40. What is 2022? Oh, what is 2022? Hold on, I'll tell you. So, 9.56.40, and then I'm gonna tell you what it is. 9.56.40 Venom Plus. So it's very similar to Venom model. It's honestly I would consider Venom model to be like a type of 2022 model. But basically all it is it's from the ICT 2022 mentorship. I will take a look at that in a second. Actually, let's just keep everything on the chart. I'll find an example over here. So, it's basically in the 2022 mentorship, ICT, he explains how you have basically different draws on liquidity, right? What you want to see is you want to see a specific draw on liquidity, like maybe like a session high, London high, Asia high, previous day's high, previous week's high, or market open high, data high, whatever. Some specific high, or even if it's just like a good looking high, right? It gets swept, equal highs. You see some kind of high get swept, then all of a sudden, after coming above the high, we start getting aggressive displacement. Boom! We start seeing huge displacement candles. Breaking old lows, like any break of an old low counts, really. And even if it's not breaking old lows, if it's showing displacement, it's still 2022 model. So basically, sweep of a high, displacement below an old low, breaking old lows, and then fair value gaps forming, right? This is your 2022 model where you have fair value gaps forming, and then even more displacement, and this is what's called spooling, actually, where basically the market keeps getting aggressive displacement off of these gaps. But point is, right, the 2022 model is just liquidity sweep, displacement, fair value gap, right? And you can find many examples of that. So why is this still on? So maybe like there might be one in London, right? We could go look at London. There probably was. There usually is one in London, I've noticed. Let's go look at London. Yeah, kinda. There might have been one. So I'm trying to find an example of one. Here's another Venom model, by the way. You see the BPR and then the two fangs. So once again, that Venom model and 2022 model are basically the same thing, where we sweep out all of these lows, sweep, displacement, retrace back to fair value gap. But I want to find a really good example for you. So like this is low-key kind of a 2022 model in itself on the 15-minute, because we sweep out PM low. We sweep out PM low. We start getting displacement higher with an outside bar. Once again, there's no official break of structure. I don't care. What I'm looking for is displacement. We get displacement. We form a fair value gap. So I guess you could consider that a 2022 model. Anyway, you'll see it all the time in your charts. I mean, just go backtest it, right? Look for us to sweep out old highs, displace lower. Hold the fair value gap, displace lower. Like this. Oh, this is the perfect example. Oh, wow, this is the perfect example. Okay. Wow, this is the perfect example, actually. We should probably backtest this. Oh my gosh. Okay, we're going to backtest this. Hang on. This is the perfect example. I think this might be like literally straight from the textbook. All right, so we sweep lots of different highs here. We sweep out, looks like this was probably London high, right? We sweep out London high. That's one high. Or no, Asia high, sorry. We sweep out Asia high. So there's our liquidity sweep. Not to mention we sweep this consolidation, right? We sweep out all these guys. So Asia high gets, but the key is in this case probably Asia high getting swept, right? So Asia gets swept. Which time frame to mark out? Any time frame. You just want to you want to clear, obvious, draw on liquidity, and then a sweep of it, and then displacement off of it. And that's the 2022 model. So here's like Asia high getting swept, but also this entire consolidation. And also low-key equal highs up here. Low-key. There is equal highs there. So we sweep out equal highs, Asia highs, and this liquidity pool. So this is the 2022 model. Also, pay attention to when it's occurring. Right after 10 a.m. This is actually Silver Bullet. This is actually Silver Bullet. I've never made a video on Silver Bullet because sometimes Silver Bullet can be kind of confusing to me. But basically, Silver Bullet is a 2022 model that forms after 10 a.m. and it's a time-based 2022 model is what it is. So, boom. We manipulate midnight. Let's get rid of the sessions. So Silver Bullet. So this is Silver Bullet where, right, liquidity sweep of Asia high. The real key obvious one is the liquidity sweep of Asia high. Then we, once again, if you're looking for the textbook break of structure, you're probably not going to see this. But if you're just understanding this from a understanding of displacement, then all of a sudden it starts to make sense where, wow, we took Asia high, we start displacing lower, we manipulate midnight, we were above 730, we were above, what's the other true open? Let's find the other true opens. There's what? $922. Yeah, so we're above that. So that was the 90-minute. And then let's see how the 22-minute true open gets manipulated, right? So 10 13 Okay, hold on. I'm almost there. I need to make a new template for this. 1013 07.5. And would you look at that? We'll get into that in just a second. Bro, the market is crazy perfect. It's ridiculous. That's actually insane. Okay, so we sweep out Asia High. Let's actually, you know what? We don't need this and we don't need that. Let's just keep it simple. We sweep out Asia High. By the way, we're above every true open. What does that tell you? We're in time-based premium, right? We're in time-based premium relative to every single cycle right now. Asia High gets swept above midnight. So light bulbs go off right when we start displacing lower, create a fair value gap. This is our 2022 fair value gap. This is our 2022 model right there. You see how the market actually respects fair value gaps when it's the correct context? When it's the correct context, not a random fair value gap, but a time-based premium fair value gap after a sweep of Asia High? All of a sudden it makes sense. It's like, wait, ICT was telling the truth this whole time. Right? And people think the 2022 model stopped working. It's like, bro, you need to backtest. You need to backtest, bro. No one's going to help you see it besides yourself. You got to go in the charts. You got to see it yourself. So this is very, very textbook 2022 model. Displacement below this low, and then, yeah. And then a fair value gap. Boom. And it's above every true open, right? Okay, so this is an example of a 2020. Actually, this is on the 2 minute. Let's see if it's on the 1 minute. Yeah, if it's on the 1 minute, if you include the volume imbalance. But it's very clear on the 2 minute. One of the most textbook examples of the 2022 model I've probably ever seen. Honestly. And then we go all the way down, bro. We go all the way down. Look how many points we get off of one 2022 model. Off of just one. And it's a silver bullet. It's a silver bullet. So what's a silver bullet? It's the 2022 model occurring after 10 a.m. That's it. That's it. That's all it is. What is silver bullet? Bullet. It's the 2022 model forming after 10 a.m. And so this is actually a silver bullet for value gap. Bang, 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 bang. We go lower. Perfect example of silver bullet today. We'll watch it till it get into my head. Yep, dude, this is ICT 101. Like, this is when you go into the ICT 2022 mentorship, this is what you see. And it doesn't make sense, honestly, for most people because they don't backtest it. They don't understand it. They don't dig into the charts deep enough. But if you truly dig deep, you'll see that there's actually real truth in what ICT is saying. It's just you don't know where to look, and you're looking at the wrong fair value gaps, and you're looking at the wrong thing. So let's go ahead and save this. Here's a silver bullet. 10, 14. I'm just gonna do perfect example of silver bullet. And then let's just mark out the silver bullet, right? I probably put stop above that high. Maybe cover back when we come down to true month open, right? Or true week open. You could also target further, but I don't think you need to. So bang. So 10-10 silver bullet. But it's, once again, a silver bullet is the same as 2022 model, but it's just at a specific time. 10-10 silver bullet on the 2 minute. And then let's also show how this is just a regular 2022 model, right? 2022 for value up on the 2 minute. Silver bullet hour is 11 p.m. GMT plus 8. A lot of manipulation. 11 p.m. You mean, I don't know what GMT plus 8 would be. That's not my time zone. But if you say it's 11 a.m., then I guess it is. But yeah, but it's after 10 a.m. New York. Bang. Right? So 2022 model. And so you were asking me what's 2022 plus, right? You wanted me to know what 2022 plus is. 10-10 2022 model. And it's something I discovered, but I'll show you it just because you're a real one and you're watching my stream right now. 10-10 2022 2 minute. Yeah. So, glad I'm here today learning something. It's worth my time. Dude, I'm glad, bro. I'm glad. So, here's the thing, right? This is something that Ice-T does not teach. He'll never teach it because there's just some stuff that he doesn't teach. But time frames align. So, I can go to a 2 minute 2022 model, and I can go to a 30 or 15 second, and then find an inversion or a change in state off of it and align time frames. So once again, Ice-T's not going to teach this. There's just some stuff he just doesn't teach. But if I go to line time frame after we get this 2022 model, which is silver bullet, I see we sweep liquidity into the gap, right? So bang, perfect. So to basically frame it's called flow state. To frame flow state, you want to see a higher time frame key level. So in this case, I'm using the 2022 fair value gap as our key level. You want to see a liquidity sweep, and then you want to see some kind of entry model leaving the higher time frame key level on the aligned time frame. So in this case, looks like it's an inversion for value gap. It's a 15-second aligned time frame inversion for value gap off of this 2 minute for value gap here. And I wonder if we have SMT. I bet we do. We probably do. Yeah, you can see there is SMT here. So SMT within this gap with ES. And then we align this 2 minute fair value gap, 2022 minute fair value gap with our aligned time frame entry, which is on the, by the way, this is a Phoenix model right here, which is kind of cool. But our aligned time frame entry is this inversion for value gap, right? My hand kind of hurts. So inversion for value gap. By the way, we might actually have been using the first center for value gap. Whoa, no, that's sick. I just realized that we're actually using the first center for value gap as a confluence when we get this inversion for value gap. Dude, the market is so cool. What the heck? Yo, I just realized that. Okay, Hold on. I will show you what I mean. So here's our aligned time frame thing. Notice how midnight was manipulated. We manipulated midnight, and then what? Then we get 10, 13, 07, so that's our low time frame true open. And look at how it perfectly manipulates it into the gap. We're above every single true open. We get our aligned time frame inversion for value gap on the 15 second. Delivering from Phoenix model, by the way. Right? And then project this out. Like go probably from here to here. Right? And then what do you see? We go 4 projections. Do you look for Chosh? To be honest, I do not use Chosh, but I'm not against it. I just don't use it. But I need to look into Chosh because I don't know actually a ton of Chosh, but I know that I don't use it and I don't honestly need it, but I'm interested in it. Do you like Chosh? It's very similar to break of structure, I'm pretty sure, but I could be wrong. I don't know. I need to actually study up on Chosh, to be honest. Okay, so delivering from Phoenix model, by the way, which is just so sick. Delivering from Phoenix. Came with a liquidity sweep. Here's Phoenix. So rejection block on the 15 second. That's holding price. Bang, 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 bang. Look at that. Look at that. What do we use it? We probably tap CE of it perfectly. We probably do. I bet you. Oh wow, would you look at that? We tapped C of the rejection block perfectly. It's almost like ICT doesn't work. What? This is so crazy. How could this be possible unless the market respects smart money concepts? Huh. CE of it perfectly. There you go. And what do you see? Right? Oh my gosh. So, boom. Yeah, down 4 projections perfectly. Every true open manipulated. This right here is perfection, right? Perfection. This is perfection. You cannot get more precise than this. Let's see if there were whales that market bought into this. You use Shosh? Nice. So 10, 15. So not a lot of whales. Well, there were some whales over here at this peak that market bought. So that actually could be used as confluence. Anyway. Check out that Phoenix model, right? Okay, we're just gonna mark this out as 2022 plus. Let me do that. And then I will mark out the Phoenix. And then I'll mark it out as Phoenix 0. Perfection. Perfection. Okay, so 2022 plus. Above every true open. $10, $20, $15. Hey, that's a 369 time. That's crazy. $10, $20, $15, $20, $22 plus. Aligning the 2-minute 2022 gap with a 15-second inversion. Can you pause the chart? I want to take screenshot. Yes, you can. Go ahead and screenshot it. I need to. I'll go on my other screen to put this on. Sorry. You take a screenshot. Okay, first I'm gonna show the 2022 model. This is the most textbook 2022 model I have ever seen. I'm being so serious. This is the most textbook 2022 model I have ever seen. This was at 10, 14, 2022 model, which was also silver bullet because it's a 2022 model after 10 a.m. No, Akash, dang it. Okay, hopefully you screenshotted by now. On the 2-minute. Above all the true opens. So textbook. And even the low time frame true open manipulated. And midnight manipulated in the sweep of Asia. And then once again, we can align this with a 15-second inversion for value gap. But dang, man, I'm sorry. That actually sucks so much. And you can see it's delivering from Phoenix. Perfect. Dang, bro, I'm sorry, though. That actually sucks so much that you blew your count. Just keep going, man. Just keep going. Yeah, CPI was kind of tricky for, I think, what happened today, huh? Because it did the whole, it was kind of tricky, what it did today. For when news came out, I watched some videos of people who got wrecked because it did something weird, like it just instantaneously voided up or something. So pretty cool Phoenix model. Once again, this is not something I'd probably take. It's just mostly just it's a proof of concept, right? And it's actually it's an aligned time frame rejection block with the 2022 gap, which is just so cool. And it's above the true open. No! Dang it. Discord link invite, or is it paid? Yeah, of course, bro. It's not paid. It's completely free. It's back in the day, I remember I just wanted people to help me with my trading, and I literally had no one to talk to about trading, and it made me feel like crap. So I just was like, you know what? I'm gonna start my own Discord, and ever since then, that's what I've done. I just started my own Discord. So the link's in my bio on YouTube, and it's completely free, bro. Completely free. It's so stupid. I could never. Back in the day, I never had anyone to talk to about my trading, and it made me so mad. But that's why I started my own Discord. So yeah. So bang, up into that rejection block. Boom. You see how a nice Phoenix model is? Now, once again, this is more of a proof of concept than actually realistic. But to be fair, it's not that unrealistic either, because it's already it's above all the true opens. We already know this is a silver bullet. So I mean, like, you can call it unrealistic, but it might actually not even have been that unreal. You could probably do this tape read it. You could have probably tape read this, because just knowing this is a likely to be 2022 model, and then knowing this is a silver bullet. Anyway, once again, just kind of proof of concept here, right? Phoenix model is goated. Bang. 1019 Phoenix model. And we actually just did we did an aligned time frame Phoenix model. I'm almost wondering if we should call this, if we align a Phoenix model with a higher time frame key level, I wonder if we should call it something. We honestly need to make a name for it, right? 1019. What is it? Any seconds or no? Yeah, it's just 1019 Phoenix on the 15-second. Yeah, if we align a Phoenix model with a higher time frame key level, we should call it something. Maybe like I need to think. Never trade news. Well, it just kind of depends. You can actually trade news. It's just you have to know what you're doing. Okay, let me think. What should we call it? Let's ask ChatGPT for a name. I need a new name, bro. I keep making up names for stuff, but hey, I need to call it something. When we have a Phoenix model aligned with, let me go. I'm talking to ChatGPT. Hold on. When we have a Phoenix model aligned with a higher time frame PD array, what should I call this for a model? I need a name. What do you guys think I should call it? Phoenix alignment. That's a very logical name, Phoenix alignment. Yeah, we'll just call it for now, since I can't think of a better name. I'm just gonna call it Phoenix alignment. And if I think of something different later, then I'll call it something different. So basically flow state using a rejection block as an entry. (1019) Phoenix alignment, 2-minute alignment with a 15-second. Okay. And then as well, you can see we tap CE of it perfectly, and there's 0 drawdown. Hey, what up, Javier? Dude, we're having such a fire backtesting session. Like, this has been one of my most favorite backtesting sessions ever. Like, this was such a cool day. So many interesting things. One of the most textbook 2022 models I've ever seen. I mean, this, I really actually am starting to get silver bullet now, because the 2022 model that forms after 10 a.m. is just, it's a lot of times it's going to be so good. Like, This is a 2022 model on the 2-minute, and then we're aligning it with a 15-second. It's crazy how precise these markets can get. It really is. But yeah, one of the most, obviously not a realistic trade right here, but I'm saying it's just proof of concept, right? I just like to look at stuff. So this when I enter on the midpoint of a rejection block, I call it Phoenix Zero because there's like essentially zero drawdown is what it is. You could probably with Phoenix Zero, you could probably have a 1-tick stop loss if you had a perfect entry. So what's Phoenix Zero? So not 1019 Phoenix Zero on the 15-second. You could genuinely have a 1-tick stop loss if you just figure out. Hey, call that trade on gold to the tick. No way. That's so sick, bro. Yeah, so with Phoenix Zero, this is kind of cool, but I can go in with a 1-tick stop loss on Phoenix Zero and be right. Here's 1 tick. 1-tick stop loss, right? Limit order at 20, exactly the midpoint of the rejection block, right? Midpoint of the rejection block is I measured this out exactly. Let me make sure I measure this out exactly, right? Right? Okay, we got it measured out exactly. Midpoint of the rejection block exactly is 25,110.25. This NQ's bearish and Asian session is, if this isn't fascinating to you, dude, I don't even know what to say. Like, this is crazy. I can go in with a 1-tick stop loss, right? 1 tick. Do you know the RR you can get on 1 tick? I'm not saying it's easy. I'm not saying it's realistic, but the fact that you could, it's stupid. That's insane. So we might need to name this like Phoenix Zero. Like, this is just the Phoenix Zero 1. This is stupid. Phoenix Zero. This is a true Phoenix Zero right here. True Phoenix Zero. We'll call this. We'll call this. I don't know. We'll just call it a true Phoenix Zero because we're literally having zero drawdown. $10.19 true Phoenix Zero on the 15-second. That's crazy. $24,500 by New York, $2,300 in 1 to 2 weeks. Oh, you think we'll be at 2,300 or 23,000 in 1 to 2 weeks? Now, let me make sure I saved this correctly. Hang on. Saved. Yeah, Phoenix Zero, and then true Phoenix Zero. That's crazy. All right. Man, done a lot of backtesting here. A lot of backtesting. It's crazy stuff, guys. Anything else we should look at? Should I take another break? Might take another break, guys. It's a 1 minute Phoenix as well. But yeah, man, so many interesting things. Jeez, dude. The market's crazy. It's so precise. It's so precise. I don't even know what to look at now. We've back tested this market so good. Oh, the percent for value gap. Yeah. We were gonna look at the fact that we actually came and used it on this swing higher here. Once again, the whale's selling up into this candle. That was a nice confluence for shorts. I'm loving looking at whales, honestly. So yeah, let's take a look at the first center for value. Oh yeah, this is the other thing. Wait, rewind the tape. This is what I was gonna say way earlier. I just forgot about it. I got distracted. I was gonna say this way earlier. So with this first center for value, I'm getting inversed. Or not first center for value. With this 2022 plus, where we align the time frames, right? I said we can align time frames. So this is 15-second inversion for value gap off of a 2-minute 2022 model, right? The cool thing about this is check out what else happens. Here. So we inverse this, project this down 4 projections. See how precise this is, right? Boom, 4 projections, and then 5. But check this out. Is once again, you can go break even at that low. So we'll mark out this as break even. Very nice break even point, honestly. But yeah, what I was gonna say is, oh yeah, the first presented for value gap from over here all the way over here. Wait, we might actually, we need to mark out the first presented for value gap including the volume imbalance. I kind of forgot to do that. Okay. But look at this. Look at how, bro, what are you backtesting? I'm backtesting smart money concepts. No, it's and strategies. Entry models are just tools. The game is liquidity and understanding accumulation, manipulation, distribution. It's not a strat. It's not one strat. The entry models are tools in your toolbox. The trading is understanding liquidity and targeting old highs and lows. So yeah, I feel like I have to explain that like every single day, but it's all good. So first one for value gap, 15-second inversion. What's cool about this? If we include the volume balance like we're supposed to, what happens? When we come back up, let's get this measured out perfectly. Oh my gosh, this is so cool. Hold on. Okay, we're gonna measure this out exactly correct from here to here. Also pay attention to the volume balance, how I call this the vulture gap, where we come up into the volume balance at the top of a 2022 model. This is a 2022 model as well, by the way. I'll show you that in a second. What I'm trying to say is, oh yeah, I'm back. If you're asking what asset I'm back testing, it's NQ. So mark out the quadrants of this first one for value gap, by the way. Boom. Boom. And let's have this show the midpoint. Okay. What I'm trying to get at, guys, is the coolest part and one of the best confluences to this inversion for value gap is that we are actually back testing the first presented for value gap. We're actually back testing this, which is so sick, right? It's like a hidden secret thing going on in the background of a trade that's already so good, right? We already have this trade so good, and we're back testing the first presented for value gap. Delivering from Phoenix model. It's like when you start to see this precision, it really does blow your mind. Not to mention, yo, wait a second. Look at the true open. I'm just now looking at that. Bro, what? 10, 13. We got to find the actual true open because I want to get this right. Okay, I actually marked it out wrong. It's supposed to be down here. Never mind. It's not that cool. I thought it was cooler than it was. It's not that cool. Still, though, backtest of the CE of the first center for value gap. But that's what I wanted to show you, is that the first center for value gap, we come back through it, we come close back through it, and then we retest the midpoint of the inversion of the first center for value gap, and then we go lower. Isn't that so cool? The way that the first center for value gap is still used. What's Phoenix model? I was just talking about Phoenix, but I'll explain it again really quickly. It'll be really quick because I want to keep backtesting this. So, see how the first presented for value gap is back tested as well when we get this 15-second inversion for value gap. Phoenix model is, what'll happen is you get an SMT, right? So for instance, this SMT with ES, you can see there's the SMT, right? You can literally see it. And then return to a rejection block, which is a wick of a swing high or of a swing low. So this is a rejection block because it's the wick of a swing high. Came with an SMT. So that means it's Phoenix model, right? So rejection block with SMT, also like usually some sweep of liquidity. When we come retest that rejection block, you enter, and it's usually going to be super high RR, like crazy high RR. Like in this case, it was like 17R, right? That's Phoenix model. It's just entering at a rejection block when there's SMT, and usually ideally a sweep liquidity, and it needs to be in line with AMD as well. There's like so many things. You can't just take a random rejection block. It's hard to explain, but anyway, yeah. So I've been wanting to look at this move higher from here to here. I've been wanting to look at that for a while, and I keep getting distracted. Been wanting to look at this. So let's go ahead and look at that. So once again, first presented for value gap, see how we reject it, and then we hold it, and then we hold it again. You see how the market's interacting with it all day long? Okay, so now we could get another trade off of it to the upside when we sweep out these lows, which is kind of cool. And the way I would take this one is just a 5-second pin bar. And I'll show you what I mean. I think, let's really quickly check to see if it was a precision swing point, but it doesn't matter if it is or not. It's just cool to see if it is or not. Just takes a while to kind of look because it's the 5-second chart. Oh, failure swing entry and targeting external liquidity. I guess you could call it that, failure swing entry. It's just entering at a wick of a swing high. That's what it is. Entering at the wick of a swing high or the wick of a swing low with SMT. Okay. So I was gonna look at, yeah, here it is. No, there's no precision swing point. Oh, dang. Well, it's still a pin bar. So. Beautiful, just beautiful. Whoops. That I just really like that pin bar a lot. I can tell we're gonna go higher when we get that. Now, once again, I wouldn't take this. I just like making observations, guys. This is too risky for me. But I just like observing. And then, yeah, this would be like a very low time frame scalp. Okay. Well, I maybe should. Is your rejection block same as breaker block, a failed order block? Rejection block is different than breaker block. They're two completely different key levels. They're two completely different P arrays. That's the official name, but they're two completely different things. They're completely different. Let's project out this pin bar. See, you see why I like this one though? Because this one, look at the signature on the pin bar. It's like boom, 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 right? And it's off of the first line for value gap, and I can just tell like, yo, that's actually pretty nice. You just take this up 4 projections. This is a micro scalp, but still, valid micro scalp, right? Imagine hitting this and being done in what, 40 seconds. That'd be crazy. Something you gotta definitely practice. $10:03:30. First strike, 1 minute aligned with the 5-second. I might be done backtesting. Let's see how many people are watching. But I might be done backtesting. Only 2 watching. Yeah, let's just go ahead and be done. But definitely a really cool day. A lot to learn and a lot has been learned. So with that, I'll see you guys